I put out this tweet yesterday, and sure, it got virtually no engagement. I don't think this would even mark as a blip on a lot of Twitter/X influencers' engagement kind of histories or whatever. But anyway, I shouldn't dwell on that. I mean, I really shouldn't dwell on that. But however, what was interesting about this was I was talking about the retracement levels in QUADZILLA, and about how in this particular case on the 1 hour chart they'd actually been knocking it out of the park. Like every one of these is being drawn, like that particular one was from way back, and just like boom, yeah, that level, I drew an array from there because that level that it had picked out just turned out to be relevant a long way along there, whether it's support or resistance along there. Same for that one, just pinpoint. That one there was a step 3 from this one, so pinpoint again. That one actually marked so it's down in a way, so that again is pretty pinpoint, if that's right. The thinking was that this retracement level is being drawn here, and in fact it's kind of like 3 in a row, because there's this one at that level, this one at the same level, then this one again at the same level, which usually means there's something very significant about it. The price is going to come back to there at some point and do something. Meanwhile, there is also this one up here, so it's kind of a question of like, well, what's the price going to do? Is it going to go head down to there first, or is it going to reverse and head up to that one? Something kind of interesting happened though. It did neither, but neither yet. The price did come down quite a lot. In fact, it wicked down to there. I've left the crowing symbols in place so I can crow about the retracement levels a bit. It came down to there. It didn't actually reach all the way down. Maybe it still will. In fact, it's very, very probable. But instead, it kind of came back up. And it formed this mid-range thing, which it's still doing at the moment. Meanwhile, it started to draw in this other retracement level as well. Yeah, it might kind of come up to there, and then down to there, and then back, and then maybe even up to that one, who knows. So something along those lines. Even though that didn't quite work out, because that would have made a wonderful follow-up tweet. Could have posted it exactly as predicted kind of tweet, but it was not to be. However, I think what we've ended up with is something potentially much greater, which is kind of a realization about just what it is that really drives retracement levels, because they're about bearish or bullish divergence tied in with particular EMA detected price trends, and so it's the overall momentum of the price, in other words kind of the strength of the price in a particular direction, versus the more immediate kind of trend. So if there's kind of like an impulse move works against the prevailing momentum, so there's like an attempt to kind of just push change. There's always kind of this tug of war on both sides, so between the bears and the bulls. Think of it as kind of like a springs and weights sort of thing. And what the retracement levels do is they tend to capture that point where the springs and the weights cancel each other out, and so the price is just going to naturally kind of spadoing back to that level at some point. Might even do that. Gets to the homeostasis at the line. That's kind of what they do, what they detect. So what we've ended up with here is a bunch of midpoints. So if I bring in a parallel channel, just to show you what I mean. So you notice there are like halfway points along this, so kind of maybe draw that from there, down, just using the shift key to spring it into place. And to bring that up, so we've gone from the retracement level down here up to the one at the top. Keep in mind that when this started, that mid-range one hadn't been drawn in yet. But you notice, mid-range, it's basically tied in very much with the halfway point between up there and down there, which is kind of interesting. So we've got like, and in fact also that, as I was saying before, came back to that previous retracement level all the way back there, that one. So that mid-range point has turned out to be significant all the way along here. Even here, we've got the high, we've got the low, and we've got the mid-range. So back here, there's also, so if we drew that with a very thick marker, let's say, then that's going to be a mid-range. So what we've also got though is the way that this price here has now started ranging sideways in a very narrow range, slightly upward trending, but if we draw in another one of these and maybe do it from there, do the same thing again, you just stay down, dobbin, and then bring that back up, just to there maybe, depends where you do it from. Well, in fact it doesn't vary it all that much really. That's kind of putting it onto that line, which is going back to that previous level, but we could put it up to the sort of fresher new retracement level, because it's just more up to date. What this tells us now is because this new mid-range is the mid-range of the lower half, so that kind of means, so back here it was the exact center of this ranging, and now it's kind of got that up and then the down, and meanwhile the price has kind of worked its way kind of subtly slightly upwards into the top half, the premium value zone of the current market really. So if you think of this middle bit as being the fair value zone, and up here we've got premium, down here we've got discount, that could well just give us some idea of just where the price is going to head from there, or rather not so much where it's going to head, but rather when the price just breaks out in one direction or the other, that'll give us a good idea of just how to respond to that. So if the price were to kind of head up here, we might well think, oh hey, brilliant, the price is heading to the upside, let's ape in with it with a long. But it's also quite likely it's just going to bounce and kind of come back down and just kind of stay within that channel. You'd want to see some kind of confirmation that it's broken above that level before thinking about longing that. And even then, it's a bearish retracement level. So, I mean, to be fair, the price could stay within this upper range for a while. You could even draw in at the channel within there. Spadoin, and so that kind of gives us a midway in that upper half. I haven't drawn that very accurately, but pretty close enough. Yeah, so that would tell us that, yes, we may not necessarily want to long the price just here because it's in the overall range, it's very mid-range, and we may want to wait for a reaction down, in which case, depending what everything else is doing, that could well be a decent short, just kind of come down here with maybe some take profit there, maybe, well, certainly a take profit there. So there aren't any particular signs that the price is going to break down below that just for a while. So yeah, it just gives us some levels to watch out for deciding whether to long or short at a particular time. So you've got more of an overall view of what's undervalued, what's overvalued, i.e. what's discount and what's premium, and just where the fair value is. Price stays here, that's the fair value. If the price wants to go up there, that's the fair value. So you get an idea of whether the market is cooking or cooling down. That's about it. Just wanted to point that out, really. That hasn't quite played out yet, but in the meantime, it's given us a whole lot else to think about. Okay, talk later.